Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Wednesday, June 1st, 2011. This morning I'm talking about manufactured growth. Now, when we think about the term manufactured, a lot of times you talk about something that's made up or something that's built, as in, you manufacture a story. Well, this morning we're getting a lot of manufacturing numbers coming out around the globe from different PMI figures from various areas, as well as our own ISM manufacturing numbers that are going to be due out later this morning. But just to start you off here, it looks like manufacturing numbers have been lower than expected in just about everywhere across the globe. Now, not tremendous losses here, but it just is a sign that we're hitting a soft patch in the global economy, that things are starting to slow down. So first thing we're going to look at is we're going to look at Australia. I'm going to show you here the Aussie dollar. All right, Aussie dollar is actually a little bit higher today, okay, on, where's the chart here? Come on, there we go, thank you. Aussie dollar a little bit higher here, perhaps putting in a little bit of a double top at about 107.5. All right, now they had their GDP figures that came in last night, and the GDP declined 1.2%, which, believe it or not, is actually not a bad thing. We were expecting a lower GDP number, decline of 1.1% because of the flooding that they had there that interrupted their exports. So this is actually seen as a good sign by the market. But one of the things that's weighing on the Aussie dollar and some of the other currencies is that Chinese PMI figures. China PMI manufacturing came in, and it came in a little bit lower than expected. So it's showing that China's slowing down as well. I think a 52 print from last time of 52.9. All right, so you can see that that's actually affecting the Kiwi. All right, which also looks like it's put in a little bit of a short-term top here at about 82.5. All right, we're going to flip over to Eurozone real quick. Eurozone. All right, they've got also PMI figures that came in. Okay, lower than expected. Italian PMI 52.8 versus 53. French PMI 54.9 versus 55. And then lastly, German at 57.7 versus 58.2, taking the overall Eurozone PMI figures down to 54.6 from 54.8. So not a big miss here. Okay, not tremendous misses, but it just shows you that we're slowing down just a little bit. All right, so it looks like perhaps a short-term top here for the euro, 144.5. Isn't it interesting how all these halves come into play? But that's kind of what we're looking at now. We're talking about the Eurozone. They're still trying to work out this Greek debt crisis thing here, and you've got Ireland and Portugal waiting in the wings. All right, nothing new happening, but you're starting to hear now all these new proposals, and every day it's going to be something different until an actual official announcement is made. But there's going to be various times when people are afraid of what they might do. Oh my God, they're going to restructure, or perhaps they're going to just extend them more money. So it's hard to say exactly what's going to happen until what actually happens. So you just want to be on alert here for the Eurozone, because it's uncertain how the market's going to react. All right, just moving right along, UK. All right, UK pound lower as well, 165.5. All right, potential little top there. UK PMI figures, actually this came in worse than expected, 52.1 versus 54.1 expectation. All right, mortgage approvals were also down in the UK as well. So we're seeing a little bit of risk aversion in the market. You've got global stock markets a little bit lower, U.S. stock futures slightly lower to start the morning. All right, we've got oil pulling back, yet it's still at around 102, and we've got gold retreating a little bit, but it's still up at around a 1530 handle. So later this morning, we're going to get the U.S. ISM manufacturing. All right, we're also going to get the ADP employment change. Now, this kicks off the next 3 days of employment figures here in the U.S. Today is ADP employment change. Tomorrow's initial jobless claims, and then Friday is the granddaddy of them all, the U.S. non-farm payrolls report. So that's really going to give us an idea of what's happening around the globe and what's happening here in the U.S. as far as economic strength goes. Now, one of the things that we need to be concerned about is that Gold is slowing. We're going into summer soft patch. We have QE2 ending. All right, we're going to have to see what happens in the marketplace. So anything that comes up that seems overly negative could potentially spook the markets. I just want to show you one more here. Dollar versus loonie. Okay, we can look here. Yesterday they had the Bank of Canada interest rate report. All right, and they actually were a bit hawkish in the report, which is a little bit more than expected. Now they didn't actually change interest rates, but they did, say that they were, committed to keeping an eye on inflation and manufacturing growth. So you can see we've got a little down move here, all right, and perhaps 97 cents now is going to be a little bit of resistance there to the upside, as perhaps we trade a tight range with dollar loonie. So different things happening around the globe, different currencies are affected by different economies. All right, we've got Canada, which is going to be greatly affected this week by what happens here with the U.S. jobs report. All right, if the U.S. economy slows, naturally follows the Canadian economy slows, and you can see abroad how the Kiwi, okay, New Zealand is also selling off based on Chinese slowdown. All right, but we also have Aussie higher because the GDP report wasn't nearly as bad as expected. So that's kind of what we're looking at today. We're going to keep an eye, wait and see tomorrow what happens with these employment figures. But for right now, they're trying to manufacture growth anywhere they can around the globe, and it looks like everybody's getting ready to slow down a little bit, which could cause some fear in the marketplace, because when things just don't go up, and they start pulling back a little bit, that sends people panicking and sometimes running for the door. So don't over panic with it. Obviously, be on high alert. Risk in the eurozone, how the restructuring is going to go. But that's what I'm looking at here this morning, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.